Speaking of standard of living, that certainly has been under pressure in the midst of this housing bust, which seems to tie right in with your scenario of a 10-year malaise here in the economy. And you're certainly right. Look at the Dow Jones, for instance, before we move on to housing. The Dow Jones Industrials has been stagnant for 10 years.
Against the measure of inflation, which I would look at, say, gold. Against gold, it has lost more than 70% of its value.
Yes, in real terms, I couldn't agree with you more. You know, a decade of easy credit, decades of easy credit, lax lending standards. This was the house that Greenspan built. But now that credit has dried up and the economy is in a downward spiral, the Case-Shiller Index is revealing more than a 30% decline in median home prices. Do you see any relief in sight, any green shoots?
Well, you see, we have to distinguish now between asset markets and the economy. The economy may perform poorly, and even, in my opinion, is likely at some point to deteriorate further. But if you read mainstream economists in the United States, and also people like Bernanke and Treasury Secretary, it is very clear that if asset markets should once again start to go down and if the economy does not recover, they'll print more money and the fiscal deficits will actually expand further. In other words, you'll have more stimulus packages. So what you can have is a very weak economy, interest rates on the short end that stay at zero, which makes cash unattractive given the weakness of the dollar against, say, gold and other commodities and also other currencies, and it drives people into equities. So I think, and also housing. So I think that maybe housing at this stage, having declined so much, is probably in a range where an investor could consider buying a house if he finances it well. In other words, finance it well, in my opinion, would be to have a relatively high equity so the owner can sleep at night and doesn't have to worry about interest payments.
You're not concerned then about the huge number of adjustable rate mortgages as well as liar's loans, Alt-A's, adding to the glut of inventory and pushing domestic prices for housing lower in real estate?
You know, whatever you buy today, you could have a 10% decline from whatever you buy, whether you buy stocks or homes or art or commodities and so forth. So that's why I say you should be prepared to finance whatever you buy well. In other words, that your equity doesn't turn negative because of a heavy debt burden. But in general, I think, having looked at the fiscal position of the U.S. and considering the demographic changes with more baby boomers retiring in future and also with huge expenditures that will need to be funded for Medicare and Medicaid starting around 2018, I think the U.S. has no other option but to print money like crazy. And in this situation, what you don't want to own are government bonds and cash. You have to own something that will maintain more or less the value. I'm not sure that house prices will go up significantly, but at least if you buy a house and you finance it yourself 100%, it's 100% equity, at the end of the day you will still have a house. Whereas with cash, I'm not sure how much the cash will be worth. With the chairman of the Fed like Mr. Bernanke, I would assume that the cash will be worth zero.
Then, despite trillions of dollars that have gone up in smoke, if you will, during this credit crisis, deflation is certainly not something that is keeping Dr. Faber up at night. This will be offset by this quantitative easing.
Well, I think the deflationists are wrong for the simple reason that, and there the Federal Reserve is right, if you want to print money, you can do it. You can't drop dollar bills from helicopters onto the United States, but you can electronically print money. And so the quantity of money goes up and you can transfer any asset from the private sector into the government. And that's why I laugh when the government says they had a $4 billion profit, because so many mortgages have now been transferred to the government. Fannie Mae and Freddie Mac are now government-owned, and they will have continuous huge losses. And so I think that deflation, in my opinion, is pretty much out of the question at this stage. Deflation would manifest itself in a strong dollar. But as you know, the dollar is weak. Deflation would manifest itself into a collapse in commodity prices. But commodity prices are relatively strong. Now, I'm not saying that oil cannot correct on the downside. I'm not saying that gold cannot correct on the downside. But let's say broader measure of inflation and symptoms of inflation do not point to deflation across the board. Now that the price of a mobile phone goes down, is the same in the 80s. They introduced pocket calculators, and then the price of pocket calculators went down, and then they introduced personal computers, and then these prices went down, and TV prices went down. This is technological progress, and from an invention, every product becomes eventually a commodity.
So, despite all these calls for Armageddon, the domestic stock market is now 50% higher than its March lows. Do you expect this rebound to continue?
I mean, as you say, we've rallied on the S&P from 666 on March 6th to 1,039 the other day. So we had a big move, and a correction may occur. But as I said, the government basically is eager to make cash unattractive and to force people to either spend it, and then, as I said, more stimulus packages would come into place and more quantitative easing. So my assumption is, say, 666 was a major low in nominal terms in the United States. I don't think we'll revisit that low. There'll be more and more printing of money. But what can happen is that the market holds here or even goes up and the dollar goes down.
Goldman Sachs agrees with you, too. They're expecting new bear market lows in the greenback, and that sounds quite inflationary.
New bear market lows in the greenback against what? Maybe not against the euro, because the Europeans are also good at money printing, and they have also all kinds of own problems. But I think the Asian currencies are in a slightly better position than, say, the euro. And as I said before, and I repeat it here, I believe that increasingly gold and silver and platinum will have a monetary role, because if I get zero interest on my cash in the bank, then there's no incentive for me to hold cash in dollars or in euros. So I rather hold it, say, in gold. Now, gold will fluctuate occasionally, but the one thing I'm sure, nobody can print and create new gold at the rate Mr. Bernanke is creating dollars.